Well, good morning. Welcome to today's ad-free live stream. Super pumped that you're here. Welcome. My name is Tyler. If you're here for the first time, I'm going to be helping navigate you through the wild world of day trading futures. Now, today may be a little less than wild. It's probably going to be pretty muted. It is a bank holiday today, so we're going to be just mostly reading price action. But I'm going to be navigating you through, showing you my daily trading bias. I'm going to give you a front row seat to all the trades that I take. Whether I take some or not, that is still to be determined. But we're going to be giving you a front row seat to all of that. Now, if you're joining after the fact, you can jump down to the key markers below where you can find all the trades that I've taken along with a detailed explanation of what I was thinking and why. I'm looking over to my left because it is like a blizzard outside right now. So I'm not sure how my connection will be. We'll see how that fares. Lastly, if you are using Apex or if you want to use a funded prop firm, and you want to save money from your personal accounts, and you want to use, add a little risk, but not, go all out. You can use the code DTJ, and that will give you an 80% discount on your next eval account. You can use the code DTJ. I'll drop that in the chat. And with that, let's go ahead and open in prayer, and we'll start with our top-down analysis, okay? So, Father, we just honor you this morning. Thank you for another day of trading. Thank you for the opportunity we have to be able to sit in front of our computers and have the opportunity to build wealth as we do today. Father, I just pray for blessing for every person here, that they see increase in their portfolio, they see increase in their skill set. And Father, I just pray for blessing over them. In Jesus' name, amen. Okay, folks. There we got it. We got it all covered. It's going to be a good day today. We're going to start by taking a look at a weekly perspective. We got a good amount of time. I have everything marked out already. So we're going to go ahead and check those out here. Okay. So from a monthly perspective, let's start with a monthly. You can see here we have our two primary monthly lines, our previous month's low and our previous month's high. Well, we've ran the high. So we're probably not going to run the low this month. I doubt it. We have about another little less than 2 weeks. But look how close we are to the all-time highs. We're really close to all-time highs. So as of right now, the draw is going to be all-time highs. That's really what we're going to keep an eye on. Let's drop it down to the weekly. If we take a look at the weekly chart, we can see our previous week low, our previous week high. We're closing above, or we opened above the previous week high. I've seen this happen before, and when we close above, or when we open a new candlestick above a high, it typically has characteristics of moving higher. Now, today may be a little bit different because it is a bank holiday, but that is something we need to watch out for as all-time highs. If we drop down to the daily, we're now getting into what our daily bias could be. So we have basically from that range, if we move to our left, there's really nothing to our left that is helpful on the daily. We have our new week opening gap, this gap right here. You can see that gap. We have and then we'll get down to some more details, but then we have our a daily fair value gap sitting down here. So could it run all the way down here, get some energy and then move higher? That's a possibility. I'm not sure if it wants to do that or not. We got our 4-hour time frame. 4-hour time frame has made a swing high here. But we have London high and midnight open, and that's kind of what I wanted to focus on here this morning as we move from our top down, is we have London and midnight open both sitting right here. And they really haven't been ran yet. So that's really interesting to me for a potential move higher. But we also have our opening range gap, our London low and Asia low both have not been tagged yet. So right off the open, I think I'm more interested in a retracement lower, maybe filling the new week opening gap, sitting all right here, London low, Asia low, and then once we run that, we may just run for London high and then consolidate the rest of the day. So I'm looking at Asia low, London high, consolidate. That's kind of what I'm potentially thinking could happen. That's my idea, so to speak, for the trading day. So if the market continues to hold in its current pattern as it is, I probably will take our 930 model. And then we will sit and wait for liquidity to be grabbed either to the downside, well, primarily to the downside, and then once that's grabbed, we will look for a long. So that is our plan for the day. Is I want to take a long to and towards London high and midnight open. But we need to wait for the retracement first to these levels. Now, if we get the retracement but we don't get a break higher, then there is no trade. I'm not going to be looking for a giant trade because it is a bank holiday. So if I can get 20 handles, I'd be happy with that and get out and walk away. And then what I plan on doing after that is doing some back testing with you guys. I'm gonna show you how I do my back testing on TradingView. It's actually really helpful, and maybe give you guys a little bit of some tools that you can to exercise your own trading model here. So with that, we got about 8 minutes till the market open, and that's pretty much all we got. I've pretty much said everything that I want to say. So, Felipe, good morning. Stan, good morning. Tony, good morning. Ashes, good morning. Dead Man Trades, can I just call you man? Dead man, dead man, dead man. Amen. Ted, good morning. You know, I could get how dead man could be like, you know, I've given my life to Christ and it's no longer I who live, but Christ in me. Okay, I could see that. Emilio, good morning. Yep, is that what it is, Romans 7:6? Is that what I was just saying? Felipe, good morning. Crystal, good morning. Birds and bunnies. Amen. Guttenberg, good morning. Yeah, as soon as I said dead man and then I thought about what I just said, I'm like, you know what? I bet you that's what it is. He did just say amen. So I think there's something there. So today is not going to be, we're de-risking. So I am going to take a trade, but I'm only using 5 micros. And I may not even take a trade, depending on what the market looks like. And then we'll see if I'm going to do anything with my small account challenge. I did want to increase my challenge or my small account challenge to 2 micro contracts. I may stay at 1 micro contract just simply because it is a bank holiday, and then focus on the increase tomorrow. We'll see. I'm only going to take a trade if it's obvious and it's there, but we're going to exercise. Today is more of an exercise of patience than anything else. That's really what we want to exercise, is our ability to say no, even though we see something that could happen. That's where we succeed as traders, is in our ability to say no on days like this. Because I did want to go short right here, I'm not going to lie. As soon as I saw this candle, I'm like, I want to go short, but I didn't. Nope. I said, no, I'm not going to do it, even though it looked really nice. Why did it look nice? Well, look at how we swept liquidity right here. Look at that little tiny sweep of liquidity and an aggressive candle the other direction. And we inversed this fair value gap right there. And we had a breaker right here. I mean, it was just all good stuff. Nothing but good stuff right though. But now we do have equal highs. We'll see where the market wants to go here. But based on this, if we can consolidate a little bit around here, this will set up for a nice push lower for the 930 model. It's doing all the movement before the open. It's a little disappointing. We swept this swing low right here. I don't like that either. We're really close to that though. We're really close to London low here. I do like the equal highs as well. London low is pretty close. It's sitting right around. Well, London low is sitting right on top of the weekly. I think we should probably tag that. Where did we open in? What's our low of day? Asia lows. Asia lows is low of day. So we'll see if it wants to do something with that. We almost tagged the new week opening gap. We didn't come quite to it, so we're sitting right above it. There's the push lower. All right. That played out. All right, let's see if we can get this tag right here. I mean, I'm assuming we're going to get this tag, which looks really nice. And I would like it to run to the Asia lows. I doubt it's going to do that right away, considering we just hit the midpoint. But let's see if it wants to run the Asia lows. So the plan, as I mentioned before, I mentioned this right off the bat, is I want to see price run here and then look for a long there. That's kind of what I'm thinking. That's what I would like to see happen. Good morning, Norman. Cobe, good morning. 5 minute has a nice breaker, Ted. Right here. Yeah, I'm not going to play against all-time highs. I'm going to play towards the all-time highs. We're just too close to those. But I do see a nice potential retracement, and I don't know how low it want to go. I mean, it could come all the way down here potentially. But my initial plan is going to be based on, once we run this Asia low right here, how do we react? If we continue lower, then I will consider changing my plan. I just broke down our new week opening gap into quarters here. Good morning, Wilhelm. I did take the 930 trade, but no, I did not take it all the way to the London low. That's not the 930 model to take it all the way. MB, good morning. Or Courtney. Do you go by MB or you go by Courtney? Either way, good morning. I'm glad you're here. All right, there's the nice push towards the London low. Let's see if it wants to fill the rest of this new week opening gap right here. We just have a little sliver left, and we'll see how this candle closes also. We got 40 seconds left on it. Our primary goal today, as I've shared at the beginning of the stream, is to be patient. That's our we need to understand that it's a bank holiday, and really we should expect to sit and do nothing. But if we get something that shows up, then hey, we will consider taking it. But we need to wait and be patient. What I really would like to see is to see if price is going to do something here and then come back up this way. Actually, you know what would be nice? We could target these equal highs right there. They just look too smooth. And then our bigger target could be the London high. So London high, midnight open, and then these equal highs sitting right here. Both look pretty beautiful as far as targets. All right, so we just filled in the rest of that sliver of the new week opening gap low. Now let's see how the candles react from this point. Tala, good morning. Yes, 930 model was nice. And if I had a preference when I look at, the 930 model, I prefer going short with the model. If I have a preference, I'm more confident on going short than I am going long. Ted, good morning. Had a good day. I took the trade to the new week opening gap below. I'll watch the rest of your stream later for back testing. Have a blessed trading day. All right, my friend. Take care. That sounds fun. It's snowing quite a bit outside. It's like, the kind of snow you wish you would see on Christmas Day. That's what we're getting right now. So after stream, I'm probably going to go scoop the driveway or snow blow the driveway with the kids. It changed my candles on my other chart. I'll show you guys. Let's see. Screen share. Does it pop up? There it is. I went to white candles. I was tired of seeing red candles. So we went to white. This is where I'll take my next trade if a small account trade. I just closed my funded accounts. I'm done with those, and we will do our final trade, if we have one, here on this screen. This will be for my small account challenge. If you are not following the small account challenge, or you're not on X, check. You can see all the trades that I take on X, along with my weekly updates on what I think, how it's going. Our goal for this small account challenge is to turn $500 into $1,000, and then we'll do another small account challenge turning $1,000 into $2,500. Basically, I'm going to grow this account as high as I can, but we're going to break it down into smaller targets for those that want to follow along. There's really no fair value gaps until our last fair value gap that has found support but hasn't filled. Or we have this 15-minute sitting right here. That looks really nice. We could really see a bigger sell-off. If we see a bigger sell-off, I'm going to miss my trade. And the London highs may be set for another day. The London highs may be for tomorrow, maybe. Like I said, I will reevaluate my plan depending on how if we displace lower from the new week opening gap. If we get a big displacement here, then obviously we're seeing more expansion to the downside, and we're gonna have to reevaluate what we want, because we do have a lot of swing lows sitting over here, and we have a big 15-minute fair value gap sitting right here to the downside. Except I don't want to fight against pushing towards all-time highs. Today is a bank holiday, so the likelihood we make all-time highs today, that just seems a little unrealistic. So maybe it wants to dig deeper. There's nothing on the 30-minute. What does the hourly look like? We got a nice gap on the hourly right here. We're inside that gap right now. Let's see where this can, and we have 18 more minutes before this candle closes. So we'll probably wait till 10 o'clock to see what kind of structure we get. 10 o'clock is the close of the 4-hour candle and opening of a new 4-hour candle. Here's the 4-hour chart itself. Maybe. Reach down, fill this 4-hour fair value gap. That seems, if we get all the way down there, I'm not even sure. That it seems likely that we're going to run here. Oh, dang it. It seems likely that we could run down to the 4-hour and 15-minute BISI. It seems it's overlapping. It looks, it's correlating. I just want to see how we're still going to react to this, to the new week opening gap, which we are still hanging around there. This could be an entry. An order block entry for a push lower. I don't like how we've started to see these overlapping price action. Do you see all that? So this overlapping price action is telling me to hold my horses, just be patient, and let price do its thing. Eva, good morning. How are we doing today? We are in the new week opening gap right now. That is correct, Adzi. Well, the new week opening gap is right. There's the high, and then there's the low. So all of this in here is that. If you guys are appreciating the commentary, hit the like button for me. I greatly appreciate it. It means a lot. It helps letting YouTube know that you guys are appreciating the stream. So thank you. But do you see how since we hit this low here, I want you to pay attention to something. I'm talking out loud for myself at the moment. Look how we displaced. And as soon as we hit the new week opening gap low, look at how price action has looked. It started consolidating, overlapping price action, back and forth, back and forth. That's just something that happens after you see price hit a key level. Now, we don't know which direction it wants to go yet following that. But it's just something that I notice. And if we go to the 5-minute, the change in state of delivery is we actually really don't have one. We need more structure. We really don't have a good spot to see a turn on price. So we have a low, high, lower, low. We did hit low of day. So this was low of day. That was low of day. Do I have that on here? Here it is. All right, so low of day was tagged right here. We have this fair value gap sitting right here. See if it wants to get down into it. That could be an option for a long. I want to see, does price find support in here or does it push right through it? Now, do you see that? That is why we want to watch and see how the candles are closing. Now, if we create an order block right here, that would be very bullish. I think I'm liking that. Is there an SMT on the... I want to see the 4-hour here. We just swept a 4-hour fair value gap as well. Or swept a 4-hour. I think I need more information. I don't have enough. I could see how we could drop lower easily. And I also can see how we could turn right here and move higher. So when I have a 50-50, I just need more details. Means I may not get the best entry, but I need to wait for more information. Because we completely closed this fair value gap right here. And then since then, just we saw this candle right here and it's like, oh man, it looks like it wants to go somewhere. And then immediately covers back and now we're just sitting right here. So let's see what it wants to do. We got about 10 minutes before 10 o'clock, and we are in the 10 a.m. macro right now. This fair value gap right here is probably the nice inversion fair value gap to the upside. That if we break through this, we could see a nice push higher. It's not a trade entry because we have another fair value gap right here, but it's definitely something to keep an eye on. Order block here. Let's see if this acts as an order block. What's after 931? Is that the first presented fair value gap? First presented would be after 931. So we got 930. Yes, you are correct. It is. Thanks for clarifying that. And if you noticed, I also included the little gap at the bottom. Any volume imbalances you include. I'm really not liking the 5 minute, the way it looks. This 5 minute candle right here is the candle. Actually, we do have a 5 minute change in state of delivery already. So I'm looking at low of day. This low of day right here was tagged by this 5 minute candle. We now closed above that 5 minute candle right here at 9:45. Now I'm just going to wait for it to come back and test the breaker. If we come back and test or re-tag the breaker, I'll use that as a potential entry, as long as we don't see it just run right through it. Because I still think we could run lower, and that's where I'm just like, when I have questions like that, it's better just for me to sit on my hands. And for this trade, for those that are joining, I'm going to be doing my small account challenge. So I'm only going to be taking 1 micro for this trade. I've already done my funded accounts. We're done for that. This morning we took a 930 model off the open to the downside. And so we're going to just focus on the small account challenge. Started with $500 and we're trying to grow that up to $1,000. With a single micro contract taking only 1 trade per day. So that's why I'm just like, I know that I only have 1 shot and I don't want to take it on something that I feel questionable about. It needs to be something that I feel confident about, you know? So there's the tag of the breaker again, and of the 5 minute change in state of delivery, right down here. Son of a gun. I just switched the NQ. I keep hitting the wrong buttons here. Honestly, if we break lower, we have a breaker right here that we could play off of. I just wish it was a lot clearer. It's just not. It looks like it's a bank holiday. I mean, that's really what it looks like. Is it a 1 minute mitigation block? No, that's a breaker. I'm just looking at the bodies. So the body, this body is higher than this body. So I'll still count this as a breaker. But yes, if you're looking at the wicks, it would be a mitigation block. Carlos, following the idea of your video where you notice the sweep before, during, and or after the macro, what can we expect? Let me make sure. Following the idea of your video where you notice the sweep before, during, and or after the macro. Yeah, so we have the sweep. We have a sweep right here. This is the sweep right here. Now, today is a little bit different simply because it's a bank holiday. The rules that we talk about are the ideal scenarios, ideal setups, ideal expectation, but we don't always get that. And we need to be able to adjust our expectation based on the price action that we're seeing. Ever since we hit this low right here, ever since we came down and grabbed the new week opening gap low and filled that, we started getting all of this really tight price action. Now, that's somewhat expected when you hit a key level, but are we going to see this sustained for a long period of time, or are we just passing time to create more structure so that we can actually get a bigger move from it? I don't know yet because there's some uncertainty with the type of day that we're in with a bank holiday. So I'm sitting here being extra cautious, and if I miss my trade, I miss my trade. I'm not too worried because it's a bank holiday. Most of us shouldn't even be trying to trade, because the things that we look for in price action that we're learning, the inversions, breakers, change in state of deliveries, market structure shifts, those things can go all out the window when you're on a bank holiday. So the only reason I'm sitting here is we started seeing good price action at the beginning. Well, it may have changed right here. I'm not sure. I'm waiting for displacement to kind of grab my attention to say, all right, now's the time. I'm going to see what happens right around 10 o'clock and then see if that gives us an opportunity. But we just want to be careful. I mean, even if I took my breaker for the first time, if we took the breaker when it came down right here, we'd be up 10 handles. 10 handles after basically 12 minutes. So it hasn't really moved. I don't want to be in a move like that. So I'll sit and I'll let this play out. And if it runs without me because I didn't get in and I wasn't willing to sit in this back and forth price action, it can go without me. There'll be another day of trading. I've just learned over so many freaking losses that I don't want to mess around with that. And I'm going to be patient and exercise the true skill set that we really need to exercise, which is patience. We have to learn to wait for those A+ setups. I just did a video on what an A+ setup is, because it's not just a specific set of criteria. It's different for each person, and each person can put together their own A+ model. But I want to wait for what that looks like. Even though I see a breaker, that's only one part. Even though we ran the low of day, that's only another part. There's other characteristics that I want to see that tell me, all right, I think we're running the other direction. And one of those, which I'm not seeing, is displacement. I'm not seeing aggressive displacement. I'm seeing consolidation. I'm seeing back and forth price action. And so that just, knowing it's already a bank holiday, makes me want to sit and be even more patient and be less likely and not just jump into some random trade. That's the last thing I want to do right now. Haven't taken anything, folks. This is the screen that I'll take the trades on. Nothing's happening over here either. So just sitting here waiting. All right, so we're at 10:01 right now. Let's see what happens here. This would have been this would have been much nicer if we saw something like this. If we came lower running below the swing low and then saw aggressive price action, that would grab my attention. Manipulation first and then expansion. That's what I want to see. If we see expansion from here with it not grabbing or showing any type of manipulation, I'm less interested in that. Still looking like it's Christmas Day outside. All right, so that's nicer. This is nicer. I like that better. It's still not the best, but at least it ran a little lower. Do you see what I mean? This is kind of the stuff that you want to get used to looking for when you're watching price. Is I want to see it run and grab liquidity somewhere. This was very, very small, but it's still illustrating the point that I'm trying to make. So now do we see, the only way I'm interested in this is, do we see aggressive price action higher with a full-bodied candle? If we get something like that, I may be willing to take a long off this inversion of the first presented fair value gap. That may be an option. But if we get a nothing burger and we get just this back and forth, then this means nothing. This means nothing. This only means something if we get price moving the other way aggressively. The other thing we want to be careful about is we have a 15-minute fair value gap right there. Once we run that high, we have a 15-minute fair value gap sitting right here. So we could come into this 15-minute fair value gap, do an institutional order flow entry drill, and then move the other direction. All right, so now we're getting some displacement, which following this candle here makes this more interesting. Doesn't mean I'm taking a trade, I'm just reading price action. Because honestly, knowing how much time we spend in this fair value gap right here, I don't know if I want to take an inversion long right there and how much that would be. It's not terrible. It's only 8 handles. All right, so it didn't close. That made it easier for me because I was really going to have to decide if I was going to take the trade or not. But it didn't close above it, so there's no trade. So if you look over here on the 15-minute chart, this is what I was referring to. Do you see how this new 15-minute candle now just wicked above that high right there? That's potentially an institutional order flow entry drill. That means if we start seeing price move this direction aggressively, it would make sense in my head that we just did an institutional order flow entry drill and we want to see lower prices. And we were just passing time for the 15-minute candle to close, wick above into this fair value gap, and then potentially move lower. So that's an option that we need to consider. Now that we have the 10-minute close, let's see what we got here. Sorry, now that we have the 4-hour candle close. So big displacement on this candle. I definitely think we could see price come higher, but I see just both sides. It could go lower as well. We still are respecting the new week opening gap, the low, which is right here. So, I mean, think about it. If would you have wanted, would any of you wanted to take this breaker long when we first got it? We had our low, high, lower low. We broke higher. This would have been your entry right here at 947. We're spending so much time, and we would have only had a glimpse at 12 handles. So I'm not even considering this as an option anymore for a breaker. Spotlight, I'm new to trading, how to start. Smashy, you took the trade? Well, you got, good for you. Hopefully you made some money on that. Spotlight, as far as starting to trade, if you want to check out Trading 101, if you're brand new to trading, you can check out my playlist that I'm building right now called Trading 101. It will start at the very beginning, what trading is, how it works, what to look for, pros and cons of different assets, and you can start there. And then I'm adding to that probably every other week or so. I'm adding videos to that to explain stuff if you want to do that for free. So that's all for free. If you're wanting to take the next step and jump all in, I have an entire course and Discord that brings the support. But if you're brand new, that would be too advanced. It wouldn't be for you quite yet. I would start with the free stuff. Get understanding of what trading is first and how it works. Kobe, you're half Filipino. Well, awesome. My wife is African. She's from West Africa. Rico, welcome. How you doing? Yeah, I don't care about low volume. Low volume just means we're probably not going to see any big runs. But I've seen big runs on low volume days too. I don't care about volume. I'm only watching price action. And if price action says it's nice and going to be clean, then I'll consider taking a trade. But right now it's not. No, she's from Benin, West Africa. Benin, which is it's right actually neighbors Nigeria. If you're entering trades too early, really everything that I've been talking about here today, Smashy has been focusing on patience. Patience. Most people they overemphasize trading models and underemphasize their ability to be patient and waiting for trades, including myself. If there is a lesson that I'm just like, man, I wish I really understood what it meant to be patient, that's what you need to focus on. Patience is hands down. Being able to wait for an A+ setup. Being able to say, oh, that looks like a nice trade, but, I'm not feeling it. I'm going to wait. That right there, that's a sign that you're moving in the right direction. Like, even though we're moving higher right now, even though we just closed above this first fair value gap, I'm really not interested. It's not giving me the signatures and price that just scream out, hey, let's look at taking a trade. This is screaming stay out right now. Because at any moment, you could just see a candle drop like that. Easily, that could happen. Yeah, slow crawl up, it is annoying, and it's something that you just have to stay out of. I can't tell you how many times I've lost money and stuff like this. I'm like, oh, it's about to go. 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 And then it doesn't go. And then, it's just like death from 1,000 cuts. Do you know what I mean? Like, there's small losses, but when you do that 10, 15 times, man, you're down. And it sucks. So eliminate all of those trades and not take any. That's the biggest lesson to learn. Do I have a video on IOFED? If not, would you consider going over it? Yeah, I can go over them. That's for those that don't know what IOFED is. IOFED is Institutional Order Flow Entry Drill. What that means is it is an entry drill that institutions will use to get in short or get in long when price is moving. When price is in low resistance liquidity. This is not low resistance liquidity. This is high resistance right now. This was low resistance liquidity. Nice smooth movements, lower. But what happens is when you have high resistance liquidity like this, it creates the opportunity for quick low resistance runs. So this candle, if we start seeing an aggressive candle lower, we'll call that low resistance liquidity. So institutional order flow entry drills only take place, or you only want to participate in the ones that are in low resistance liquidity. For example, what do you see right here? You see a bunch of price action right here. You see some gaps, right? But when you got a gap next to a gap, that's technically considered a fair value gap. Well, if we put this fair value gap on here, look what happens. Look what price came up into. See how it just comes right into there and then it aggressively moves away? That's an institutional order flow entry drill. And when you see price moving aggressive in one direction, you can turn these institutional order flow entry drills as an entry point for you to also participate in the down move. Now, the hardest part is being able to identify when is it and when isn't a good time to take the trade. And there's no easy answer for that. If you have a clear draw on liquidity to the downside, say the Asia lows like we saw down here, and we see price action do this, this could be one. But here's the problem with this. This was 930, so I would have never taken that trade. That was just 930. I'm not going to get in because we hit that fair value gap going short right at the opening bell. Too much volatility. But you can, if you go back and you look at price action at different points throughout the trading day, you'll see opportunities that would have afforded you an entry. Here's one right here. You see price moving aggressively higher. We're leaving some form of consolidation here, and we're moving higher. And then we drop down into this fair value gap right here for probably 2 seconds. And then it starts moving higher again. Now, how high does it go? Well, you need to understand draws on liquidity, and that's another conversation. But that's basically what institutional order flow entry drill is. And we had that whole conversation with price doing absolutely nothing. We 3-minute inverse. All right, let's see what we got for a 3-minute. All right, so the reason why I don't like the 3-minute inverse is because it's a fair value gap right here with another fair value gap right there. So when there's multiple fair value gaps, I don't like going long on the first fair value gap because we could just run into that and turn the other direction. For me, in my model for inversions, I only want a single fair value gap. So I either find a price leg with only one fair value gap, or I go up in time frames to find that one fair value gap. See how there's some more up here? Oh my gosh, I keep doing that. See how there's another 5-minute fair value gap up there? So your only option is to take a 15-minute, which I personally would never take a 15-minute, when you close above this to target those equal highs. So if price keeps doing what it's doing, we still might see it run all the way back up here, guys. I'm just not liking how it's running, so I'm not going to participate in it. Price could be erratic today because the stock market is closed. 100%. Right. We had our opportunity. We had the opportunity. It was right in all of this. That was our opportunity. There's usually at least one decent setup, even on a bank holiday, and this may have been it. There could maybe be another one, but maybe not. Order flow and ICT is the same thing. Order flow is a concept ICT talks about. Order flow is how price moves up and down. All of ICT's concepts, when you combine them together, helps you read order flow. That's what order flow is. Order flow is just the reading of price action, and I'm using ICT's concepts to put language to it. That's all it is. That's all we're doing, is giving language to something that he created. He gave language to something that is happening in the market. I never had language like that before. Before that, I'm like, yeah, oh man, maybe it turns here. I don't know. Maybe we got some resistance here. Maybe we're going to find some support here. I don't know. But now I have language for everything. I have language for it, right? I don't think so. I don't use volume with order flow. Other people do. I don't. Order flow is how order is flowing. It's price action. It's how the candlesticks move. That's how I use it. That's my language for it. But I do know some traders, they use volume to help determine where they think order flow is going to go next. I don't use volume. Guys, you go onto any volume chart. I guarantee you, if you look right here at the price level of 22,250, 259, you're going to see a lot of volume sitting right there. Why do you think we have these equal highs there? Because that is where naturally volume is going to rest. Liquidity is going to naturally rest at points like that. So I don't need to look at volume. All I got to do is be able to understand where are the obvious swing points that orders are going to be resting. And it's obvious. Like if we weren't seeing this price action right here, I would 100% be long towards this equal high. If we got something that was very clear and obvious for an entry that gave me a target, I would be taking it. But we don't. We got all of this crap. So I'm not able to participate as of right now to run towards these equal highs, which is an obvious point where there's going to be high volume. Look at it. I mean, you look at any of the volume profiles. I guarantee you there's going to be high volume there. There's also going to be high volume here at London High and Midnight Open. Because these are obvious points that liquidity is going to be resting at. So I don't need to look at volume to determine where I think the target's going to go. I just look at the structure of price. I look at the market structure. This is too smooth. There's too many retail buyers thinking, oh man, look at that. 1, 2, 3. Oh, and it fell. If we come back over here, this is a good place to set my stop loss. Hey, did you explore more about that video about the secret model by accident? One who commented about working 9, 11, 1, 3. I'm back testing and at this point looks really good. I'm waiting, if I'm honest with you, Roberto, I'm waiting for, I'm looking for price to spool from 2 to 3. And I want to see how it reacts to that level. I have not looked into 9, 11, and 1. It's only been the 3 o'clock because that's what he talked about. It being specifically for his end of day macro. And honestly, since that happened that day, we haven't seen another day. But I've looked every single day to see if we get a spooling of price creating a low or high of day around 3 o'clock to see if it does it again. But my assumption is I think it will. And to be honest, I might just take a trade off of it, even though I really haven't done any extra back testing on it. Because for every example, it did it. And so it looks really good. It's just a matter of waiting for price to do its thing again. You did it on every hour. So for Roberto, for every hour, are you saying that for every hour that it makes a lower low or low of day or high of day, you find resistance there? Is that what you're saying? That it doesn't run that low again? Or it bounces, or are you saying it just bounces from there and it may make a lower, or it may make, are you saying that it never makes another low, or it could later on, but you can take a trade off of that? For those of you that don't know, I made a video. It was called ICT's Secret Model Revealed or something like that. He goes in and starts talking about a model that he said he would not share. And I'm like, okay, well, let's see if we can figure this out. And I started just messing around with stuff. And in that video, I talk about some of the things that I found and shared it with the community to see if anybody else might have an idea what's going on. You tested a lot. It did not work only one day. It didn't work for one day. No, he hasn't gotten back to me. No. That would have been nice if he did. Even if he just gave a smiley face, that would have been enough for me to know that I was on the right track. You know what I mean? I didn't get nothing. All right, so we have this order block right here that price has pushed through for the most part. This was the order block. I was just keeping my eye on it to see if anything was going to happen with it. and we've pushed through that, okay? So still making that slow grind higher, nothing that I want to participate in. Man, that stinks because this looks really nice up there. And it could absolutely work out where it just does this thing back and forth and eventually hits it. But I really don't want to mess around with that. Now we just ran into the London low. I probably will. I was hoping somebody, I was hoping I would get just like more people like you, Roberto, where everybody's just testing it out and everybody's telling me what their findings are to kind of help me narrow down what I would look at if I wanted to do more. But it's not a model that I personally am testing because the main reason is it happens only a few times a month, maybe once a month. So it's there, and I'm willing to take it if it shows up. But primarily, every single day, I have the model that I want to use, my inversion and my breaker. Or the inversion and breaker. That's primarily what I want to trade. Because it shows up every single day. Every single day, I can trade that. Now, if what you're saying is true, Roberto, and it does it every hour, then there might be some more opportunities there. I'm not a fan of taking trades at 10:30. We're 2 minutes before 10:30. Smashy, currently on a plus 1%, but I'm not happy. I took a trade with that price action. Well, that's better. I mean, then close the trades, close the chart, walk away. Or put on a demo account, don't take any trades, and just read price action. Which ICT playlist do you recommend to start with? I'm currently on the core content. That's fine. Go through 1, 2, 3, and 4. I only went through the first 4 months. And then you can go into 2024. 2024 is good. Here, I'm going to do a quick survey here. All right. So with price action that we've been seeing, I'm probably not going to be taking a trade if I'm honest with you guys. So I was talking to my Discord earlier yesterday. I was gonna do a stream just for my Discord and go over how I backtest and doing what I'm looking for backtesting. If you guys, I would just want to find out how many would want to do that this morning right now, because I'm probably not going to be taking a trade. I will be talking about price action, but I'm probably not going to be taking a trade based on what I'm seeing here. Oh, you know what, Mr. Pirate? He released some core content that he had for his 2016, I think it was in 2016 mentorship. He released that content. That stuff was really good too if you wanted to come up with a model. But honestly, I would just learn and understand his concepts. There's so many different ways and so many different models that if you start trying to do all of them, you're going to just be overwhelmed. So overwhelmed because there's so many different, like, I remember when ICT mentioned that he's like, I could come up with a new trading model every single day. I'm like, that's insane. How is that even possible? Where I am today, I understand it. I understand it right now. We could create a model right now for a low of day model. What do we do when price hits low of day? We can create a model around that. We can create a model around the 9:30 opening price, which I did. We can create a model around the first presented fair value gap, which he did. There's so many different ways to create models simply by understanding all the different characteristics of price. You have your change in state of delivery, breaker, mitigation blocks, rejection blocks, order blocks, fair value gaps, inversion fair value gaps. All these things work together to give you a language of the market to be able to put together your own model, right? You start seeing things happening over and over and over, and then you can start making trades. My favorite are breakers and inversions. Those are just the most obvious ones for me. Okay, so we're going to go ahead and do some we're going to do 1 day's worth of back testing. It's not going to take very long, but I'm going to show you how I do it, okay? So we're going to jump to this screen right here, okay? So when we are looking to back test, let me go to here as well. Okay. So the first thing that you're going to do is you want to zoom in as far in as you can, and then you're going to select replay. Once you select replay, I didn't realize this though, folks. This is pretty cool. So when you zoom all the way over to the left, you'll see here in a second, you'll see that I can't go any further than this, right? It stops. So I only can go back to January 26th. This is really nice. Watch what happens when I clip this. It just added more candlesticks that go back further. It added more candlesticks to go back further. So now I can do this again. I can scroll all the way and go back as far as it will let me with the current candlesticks. We'll get there here in a second. Hang on. So there, it won't let me go back any further. But if I select down here, the select bars to go back further, I can actually go back further. And then guess what? It adds more candlesticks for me. So I did this and I went all the way back to my point right here. I'll show you here in a second. One more. And what I did was simply this. To know where I'm at in my back testing, I go 1 day at a time. I'm doing 1 day moving forward each day. So right now I'm on December 3rd and I'm back testing from December 3rd. You can go back further as far as you want, but then I go back to a specific date. Once I get to that specific date, I'm then from that point on going to move forward 1 day at a time. And I'm just going to look for my model every single day, 1 day at a time, because only thing that I'm doing is I've already identified my model. I've already identified the characteristics I'm looking for. And so now I just want to practice that in a safe environment over and over and over so that I can recognize it quickly and I can actually take the trade and see how well I'm doing in a safe environment so that when it shows up in live price action, I take the trade. Okay? So in this case right here, I make these vertical lines to start at 9:30, 10, and then it goes for every hour till the close of the day. And then every time I want to go to the next trading day, I just move this to the next trading day. So we can see here. So we have price action right here. I'm just going to select all of these. I'm going to select all of these. And I'm going to move it to the next day, which is sitting right at 9:30. And so now I know that I'm back testing this day, December 4th, for all my back testing. When I start with my higher time frame analysis, I want to start at the daily time frame. So the thing about when you want to look at your daily time frame, you have to have your candle be before 4:15. So this candle right now is sitting at 4:14. Okay, that candle is sitting at, let's add one more, is sitting at 4:14 right there. So now if I want to go to the daily chart, I can see the daily chart without it showing me the current day's candle, knowing which direction it's going to go. So this is where I start my back testing. I start by looking at the daily time frame, making sure that the replay ends at 4:14, so it's only showing me this candle. If I go to 4:15, it's going to show me the next candle. It's going to show me the candle that I'm trading on. I don't want to see that candle. So I'm starting with just this candle. So you can see, based on December 3rd's price action, we came up really close to this previous week high. So right now I can tell you that my interest is going to be looking at that high. I want to see if it wants to get there. We also have a daily fair value gap sitting right here that I'm going to mark out as well. Because after I get off of this daily time frame, I can't go back on it again. And if I do, it will show me what happened. I mean, I'll be able to see where the candle ends up, and I don't want to see that. Okay? So I'm looking at the daily time frame to get my higher time frame analysis to know that, okay, we have a daily. We could potentially run down to here, or we may run to the weekly high. One of those is an option. Okay? Once I do that, I'm dropping down to the 4-hour, and I'm doing the same thing that I do every single morning. Okay? Every single morning. So right now there's 2 a.m. I'm going to add one more candle because I want to go to 6 a.m. I want to see what the next candle looks like. So this gives me the next candle. Okay? This gives price action. No, that's from 2 p.m. That's 6 p.m. We're going to go all the way to 6 a.m. So there's 10 p.m. There's 2 a.m. There's 2 to 6 a.m. Okay? So now I don't want to go any further because this candle goes all the way to 6 a.m. So now I can see where the 4-hour candles are sitting and get an idea of, do I want price to go lower or higher? Well, we can obviously see over the midnight, over the London session, we went higher. I'm then going to drop down to the 5-minute, and I'm going to mark out all the London highs, London lows, Asia low, Asia high, midnight open. I'm going to mark out all of that the same way that I do every single morning with you guys. Every single morning I mark these levels out because these are key levels. Well, I can do that when I'm back testing the exact same way that I'm going to trade every single day. Okay? So we have our London low sitting right here. London high is already taken. Do we have Asia low? We probably have an Asia low here. So we got Asia low and, sorry, I did the wrong one, London low. Okay, so all Asia high, London high has all been tagged. The only other thing that we need to grab is midnight open and then our new day opening gap. This is all the stuff that I do every single morning. And I'm just going to repeat the same thing when I'm back testing. Now, the next thing that we're going to do is we're going to swing over here to mark out our new day opening gap. And so we can see we have our new day opening gap sitting right here. This is our new day opening gap. So this is our new day opening gap high. And then we have our new day opening gap low. There we go. So we have all the things that we want marked out. The next thing that I'm going to do is I'm going to get price to get all the way to 950 or 859. Because I want to look at the hourly candle at 9 o'clock. So we're going to go all the way to there. Because I don't trade the pre-market. $45, $50, $55. And we're going to drop down to the 1 minute, make sure we got it. All right, so see how this candle right here, see how this candle right here, if you look down here all the way at the bottom, the black box, that candle is at 8:59. Now, because it's at 8:59, I can go to the hourly time frame and I can look at the hourly chart, and it's only going to show me the 8 a.m. candle. It's not going to show me the full 9 a.m. candle, which we don't want to see that yet because we haven't we don't want to give away where price is going because it's pointless if you know where it's going to go. So we see that we have a big displacement here. We see big displacement here, big displacement here. This looks potentially like a trending day. The last thing that I want to mark out before we get to our opening price is my opening range gap, which the opening range gap is going to be absolutely gigantic. I'm pretty sure. And the opening range gap is created from the 415 candle, the close, the opening price at 415. So there's the opening price. That's our opening range gap. I love trading the opening range gap, so I'm always putting it on the charts to know what our options are, okay? I just don't like it all that, so I zoom it in to make it smaller. Okay, so this is all the prep work that it takes for me to do my back testing. And my goal is only to do this once a day, okay? My goal is to do this once a day. Now I'm going to forward price to get to 929. There we go. So now we're at 929. So this is where I first take my 930 model. So now I can actually practice taking my 930 model and to see if it has the characteristics that I want based on price. I can also go up to the 30-minute chart if I want to look at a higher time frame because I'm sitting at 929 and I can see a full 30-minute candle. So that's what I'm going to do right now to see if we have any price action to the left, and we don't. We are in new territory right now. So at this current time, we're at all-time highs. And we made all-time highs right before the market opens. So I can tell you pretty confidently that I'm interested in this running lower. So if I'm taking my 930 model, I would literally say, okay, I think that I think the 930 model, we're going to go lower, and I'm going to take that trade. Based on this price action, I see a high, low, higher high. We displaced lower. We came back up into this. There's the breaker before 930, and we're seeing it sell off. We're also getting an order block right here at 928, and we're seeing the 929 candle close below this, creating this order block right here. So I'm already pretty confident that it may want to move lower. So we have our opening range gap, and you could take your first target. If you have a different model, you could test out when we have the breaker and we have a continuation, does it automatically run to, the midpoint of the opening range gap, right? There's so many different things that you can now test. I'm looking left, and I'm liking all of this low resistance liquidity. Now, at 930, I don't take any trades but my 930 model. So I'm only looking to try to get 10 handles or so. So I'm going to actually we're going to take a trade, and we're going to see if I'm going to be correct. I'm going to set my profit to be at 10 handles, which is right here. And we're just going to click it once to go to the next candle to see if it plays out for me. In this case, the 930 model worked. I just got my target, and even though it didn't drop lower, it ran my level. So this is how I test my 930 model in a safe environment over and over again to start becoming more familiar with, I don't know if I like this setup or not. I can actually test out my 930 model in a safe environment. Okay, so now that we're sitting here and knowing that we're at all-time highs, I'm looking for my model. Okay, if we did in fact already hit all-time highs and we are going to see a sell-off, I like that idea. Where is my obvious entry point? If I'm honest with you, I think price could sell off right here. But I'm not totally convinced that it could do that. Oh, I mean, look at that. Look how it's nice to be able to go really slowly. Look at this candle right here. This price action here, low, high, and look at this candle's low right here. Look at that. It wicked and touched that top. So now I'm in a safe environment. This right here is a signature in price that's overlapping with this down close candle right here, this breaker. High, low, higher, high. Now, because we're in a backtesting environment, I can go back and I can test this out. You know what? There's a fair value gap right here. What if this is a breaker? I personally like how the candle closed below it. Okay, I think I'm going to test this out. I like it wicking up into this candle's low. I like it finding resistance here. I'm going to test this out again, and I'm going to see if this is in fact a breaker. I'm going to set my stop loss to 10 handles, 21 to 31. You can say it's 10 handles, or you can even go 15 or 20 handles, whatever your model is for your stop loss. So in this case, I'm going to go a little bit higher. I'm going to go to 36. So that's a 15 handle stop loss. The reason why I'm choosing that is I wanted to be above this order block right here, and I wanted to be in line with this potential breaker right here in case price wants to wick back up to there. Because I think we have some room to the downside. So now what's my downside target? Do we run all the way to the London lows? Do we stop at midnight open? I don't know. Let's test it out. Let's see what happens. I like the idea. Let's see what price gives us here. Oh, big drop. Okay. Let's see if it is going to be in our favor. So I might consider myself moving this up to the midpoint, because I think we could actually it could run to the midpoint of the opening range gap and then run the other direction. So then you got to decide, all right, at what point do I want to move my stop to break even? What point do I feel comfortable moving my stop to break even? And for me, I would say if we can make a lower low right here, I'll move my stop to break even. All right, stopped out. Now what I would do is I would go back and look at everything that just happened. All right, I initially had the right analysis. We hit this breaker and we aggressively moved away. Why didn't we run lower? Well, let's look left at this point right here. Let's look left at this point. Let's see if we see any signatures in price that it didn't make a lower low at this point. What time frame are we at? We are at 55. Let's go 56, 57. Let's jump to the 5-minute. Let's jump to the 15-minute. 30-minute. And hour. Nothing. There's really nothing here that tells me this should have gotten stopped out. This just tells me volatility is taking place. And look at these candles. So now I'm back testing. I'm looking at now this down close candle right here. And look at this. That is a breaker we identified earlier, but we went short based on this breaker first. What did price come and do? It went lower and then came back up into a higher breaker. So my guess, now that I have this loss, my guess is, and I missed this opportunity right here, my guess is we're probably going to see it sell off. So now, because we backtest, we have an idea, we saw what happened, we figured out that maybe we should have had a higher stop loss. My stop loss was in the right spot, but I just wasn't quite outside of the wick range where it does all the damage. Let's just see if it plays out in our favor or if it continues higher. Okay, so what did we do? We just made a higher high. Now I can go back and I can analyze and say, all right, well, we are at all-time highs, and maybe I shouldn't try to fade all-time highs. So when I talk to you guys about, man, I don't want to go short right now because I think we could go towards all-time highs, it's because of doing stuff like this over and over. It's because I've seen all-time highs just crush my shorts over and over and over. And because I'm back testing, I'm giving myself opportunity to see more scenarios in a safe environment, properly testing out my strategy without risking any money. So now that we swept this high, I like that. To me, that's a grab on liquidity. We see major displacement. I'll look at this as an opportunity to go short there or there. Let's see what the next candle gives me. An institutional order flow entry drill. So now we have to decide, do we want to take that institutional order flow entry drill? Do we see it being aggressive to the downside? For me personally, I'm not a super big fan of doing that. I'd rather it come up and hit my level. So let's see what the next candle does. There would be your opportunity. So now that we swept the high and we have a lot of space to the downside, do I want to test out? And do I feel confident about it wanting to run this low resistance liquidity here, the midpoint of the opening range gap, coming back down to midnight open? To me, that's potentially worth trying in a safe environment. So that's what we're going to do. We're going to sell short here. We're going to set our stop loss 15 handles again. And we're going to set our TP at the midnight open. And let's see what happens. So no. Again, what is this telling me? We are in a bullish environment and I have my bias wrong. So I should not be looking to go short. This is here to help teach us and give us scenarios where we can learn from in a safe environment. So this is what I do every single day. I don't care if I win or lose. If I get 2 winning trades, I'm done trading for that particular day because I want to be consistent and only taking 1 or 2 trades. Well, I took my trades. It didn't work out. You can do this all day if you have a different strategy. But then what I would do is let price play out all the way till 4:15. And then we would do the exact same thing that we just did at the beginning of this. Set everything up and then do it all over again. That right there is what I do for my back testing. And I only do it for 1 day. 1 day, I'm done. The next day, I'm doing it again. The next day again, and so forth. And that's all I do. That right there is back testing. You can go back as far as you want because when you start using the replay, when you start selecting the replay bar like this right here, it can go back as far as you want it to go back. All right, did we miss out on anything? No, but we're seeing price starting to move. All right, let's take a look here. Let's take a look-see. It's almost 11 o'clock. I like the time. We have an inversion right here. If it closes above this, I'm okay trying to take this swing high sitting right there. I don't know if I'm going to do it with my small account challenge, but there's your, is that an entry? Did it break? No, it did not. It did not close above the inversion fair value gap. Was that helpful, folks? Hopefully that was helpful. Honestly, what I would like to see if I was going to take it with my small account, I would like to see a run for this liquidity here and then move. Filling that and moving higher from here is an option too. Look how it filled that fair value gap almost to the tick. I mean, this looks really nice to want to go long right there. I'm not going to do it though. If this closes above, I will take this for a quick scalp. Let's see. And move my stop to break even fairly quickly if it closes. It did not close. No entry. And there's the target. So we did not get the close above the fair value gap to give us the entry. You can see that. Again, didn't close. We saw a signature and price right here that I liked, that signaled we could go higher. I just wasn't willing to take it because we didn't close above the fair value gap. That's not a 4 minute. That's a... I don't know what I'm doing there. 5 minutes there. No, I want to see the close. I don't like the jumps. This right here, are you talking about this candle at 10:59? It opened above it, but it didn't close above it. I'm looking for just the close. Oh, look at that. So we just filled in this fair value gap right here, and we might be rolling over right here. ICT talked about this in one of his videos, how you can make sure that it doesn't run. Why is this portion of the fair value gap going to be left open? Because of this candle right here. We'll see if it wants to go higher. I mean, I still think the drawn liquidity is the equal highs. I don't think I would have taken anything in here anyway. We have all of this. Maybe here. No, I don't even think I would have taken that. There's a small little breaker right here. High, low, or no, yeah, low, high, lower, low. Low, high, lower, low, break higher, right into this order block. Oops. Nothing looks really obvious to me with, I mean, this looks obvious. But how we get there, I could see is rolling over and then coming back. I do like this. Hmm. If something is obvious, guys, I'll look at taking it. I'm probably only going to be on here for probably another 10 minutes or so. And then if I don't see anything, we'll be done for the day. But today's a bank holiday. I didn't expect anything amazing, and I'm not willing to risk my small account challenge for that if we're not seeing anything obvious. Yes.
Is there anything like that I can print off of it? It's not your computer.
That you can what?
Print.
Mom's computer.
She's working.
Wait until I'm done and then you can. I'm only going to about 15 more minutes. Look at that gap right here that we just got. Look at that large gap. Isn't that very interesting? all these gaps make price action harder to read, because price is going to want to fill those up and balance them. So when you see a candle like this, the question is, are we just filling this gap, or are we really being aggressive moving this direction? There's one more volume imbalance right here that if we can wick down into and not close below but find support in, I may look at that as a potential long from this order block here and volume imbalance. Yeah. Yeah, folks, I think I'm going to call it a day. I'm not liking too small of movements for me. I don't want to risk it. I'm not going to put any risk on the table for that. We took the 930 model right here, played out nicely. So got my funded accounts green for that trade, but that was literally the only trade that we took, and then we just been waiting on this all day. So I will be back here on tomorrow. We'll be trading the PM session tomorrow afternoon. So if you want to join, we'll probably be going live somewhere around 1:30 New York Standard Time. And then Wednesday, Thursday, and Friday, we'll be back at 9:15 in the morning. We'll be here, 9:15 New York Standard Time. If you want to use Apex as a prop firm, all I ask is you try to use the code DTJ. I would greatly appreciate it. Oh, are we getting that expansion higher now? That looks nice. I'm going to let it go without me. I'm going to exercise not taking a trade. I'm going to exercise not taking a trade. Even though this looks really nice, beautiful large-bodied candle. We got an order block right here you could go long from. So your entry would be, if it can get down into that 5-minute, you could take that. But I'm not going to take it. I'm going to tell myself that I am done, and no matter what I see, I'm going to walk away. That is valuable to me, to build that strength of discipline and not taking a trade, even though there may be a setup, right? That order block worked out nicely, didn't it? it supported that order block. 1, 2, 3, 4 times it hit the 1 minute order block. Beautiful. It was only beautiful after we got in this candle right here. Because all of this price action here, it's like, I don't want to be in this choppy if it's going to do one of these things all the way up like that. I don't want to mess around with that. So that would be your entry right there. Stop loss would be below this candle right here. But again, it's a bank holiday and it could just completely drop. So I'm not going to mess around with it. So all I ask is use the code DTJ, guys, if you want to use Apex. It's $29 with the 80% off they're doing right now for a 25K account. And then it's $33 for a 50K account. And I trade 50K accounts with Apex. That's what I personally am using and what I personally do. So I have my personal account and then I have my funded accounts that I trade. That is all I got. So here's what I'll say. Toxic, if we're not gonna, let's keep it cordial and considerate to everybody else here. If not, then we'll just kick you out, because that's the environment we will have here in the chat. Is cordial. So, but anyway, guys, that's gonna be it for today. God bless, stay safe, and we will be back here tomorrow. Take care, guys. Bye bye.